Valutrades, forex, CFDs, and commodities.
Hello traders, let's have a quick look at what does it actually mean, day trading. Day trading by definition means that you trade within a day. You open a trade at some point in the day and then you close it, and that can only last a couple of seconds, minutes, hours, but the idea is you stay within the date. On the other side, there's swing trading. In kind of my context, swing trading would mean that you keep a trade open for a couple of days, maybe over a weekend, a week too, but not longer, right? Because then we go into investment and in other territory. But when we talk about day trading, and that's what CFDs are really good for, we talk about opening and closing a trade within a given day, which obviously is quite attractive for a lot of traders because you can choose yourself when do you want to be active in the markets. Admittedly, it also comes with risk because day trading utilizes what's called leverage. So you give one portion of your equity to open a trade plus some margin, and the broker will match that and give you actually quite a lot of debt to make it work. Because look, here's a euro US dollar 15-minute chart, and you see on the bottom right, maybe it's a bit tiny for you to read, but you can see it's 1, 2, 3, 4, 5 decimals behind the dot. So you need a lot of capital to actually being able to exploit any market movement. Let me just quickly give you a couple of ideas on how to segment the market. So as we trade here forex, other kind of indices or commodities are also available, or crypto, but let's just focus on forex. The beauty of forex is that it's a decentralized market, which means that the market is open 24 hours a day. You can broadly split it then into three zones because the trading day will start in New Zealand, Australia, Asia. That's why we call that the Asian trading zone. So we call that the Asia session, and that runs roughly around up to 8 o'clock UK time. Right. So the vertical line that I've drawn here now shows you the start of the day. Let me zoom in a little bit more. The start of the day, and then we go all the way to 8 o'clock. And you can see that the market stays in a fairly tight range, right? So a lot of traders then look for a breakout out of that Asia range. While market participation is significant, it is much bigger than the traders in Europe, especially in London, really kick in. And as you can see, the market now moves up and also moves down again in the European or in the London session. So a lot of traders, when they think about their day trading, really structure the day trading around that. As we move across the globe, obviously the Americans at some point come in. Let's move a little bit forward. That's roughly around here. Um, so let me show you again. This is the London session. You have some really nice volatility. Market moves up, market moves down. So there's plenty of opportunities. If you missed the first move, the second one will also be an interesting one. And finally, we have the US session, right? And you can see again the market changes direction, and in this case breaks out to the downside. So again, a lot of traders just look specifically for that period in time in a given day to set up some trades, right? So it's really your decision which session you like. At the end of the day, also the US traders, and as we reach the West Coast, will stop trading in their trading day. And when we reach what I would call the twilight zone, there's not a lot of liquidity and volume in the markets. Unfortunately, that's where a lot of retail traders try to engage with the market, but I cannot recommend that. That is a period in the day where you want to get very active. I would recommend focus on your analysis, focus on your risk management, and focus on automating your trading setups, and don't try to put in large positions at the end of a trading day when the volume is really low. And then again, we hand over to Asia and they kick off the next trading day again. So hopefully that was helpful, just segmenting the trading day into the Asia, the European slash London session, or the US session, and the kind of a time between. Not really good for trading in my book unless there's a huge news announcement. And also the reminder, be careful. There's a lot of leverage that you're being given by the broker. and you need that to exploit, especially in currency, the intraday movements. But have a look also for videos and webinars and blog posts where we talk about risk management, money management, absolutely imperative when you want to be successful in day trading. Hope that was interesting. Please have a look at all the other videos that we are producing, and I look forward to welcome you back. Thank you.
Value trades, forex, CFDs, and commodities.